And this is exactly why we use the access points that we do between the breaker structures and the BCRs. In this instance, that's a really difficult one because of where it is. Usually the BCR would happen here. It didn't in this instance, which is why I wanted to add this one in and take the time to work through it, because it is a bit more of a tricky one. Good afternoon, ladies and gentlemen, and welcome to your Markets Now session today, which is actually a trading workshop. Hope you're doing well, team, and getting ready for this afternoon, where we're going to be digging into access points and entries and everything in between. I think it's long overdue, this one in particular, and I've been so focused on hammering out my own trading performance. Haven't really done any workshops. I mean, every day is a workshop, right? There's always little things here and there, that we go into, but there's never a dedicated workshop. And I used to carry these things out all the time over the years, but it's not something I've done, especially over the last, I'd say, 12 months to a year, 12 to 18 months. I've been very, very quiet on the workshop front. This was actually brought to my attention by Jack in the room. So thank you, Jack. Everyone can thank Jack, because Jack was the man that gave me the nudge over the line to get on with the workshop. So here we are. So we're going to do some housekeeping. Obviously, we had a lot of positions yesterday. The order books were actually really bloody packed out. It was a crazy session. And yes, you do have to pester me. Yes. The thing is, I like carrying these things out. I want to do more of this, but I am so pressured at the moment on trying to spread the word via our social channels and let people know that we do exist. And even though we don't have a massive gold dollar change around our neck, we can actually make money in the markets. And it's been a trialing period. It really has. It really has. It's been hard work, definitely. But hopefully we're on the right track. Good afternoon, Braden. Good to see you, mate. So yes, we're going to be starting today's session with some housekeeping. We're just going to cover off, do some housekeeping. Cover off yesterday's positions. Have a look at where we're at the moment. See if we need to make any adjustments to the fund and any of your guys' portfolios who have possibly followed in on some of our positions. And then we will actually dig into the access points and entries. I don't want, just for the sake of a workshop, I don't want to completely dismiss yesterday's work and everything that we've got going on at the moment. So that's going to be the first point of call. So we'll go down, we'll start from the bottom then. So USD Swiss untriggered at the moment, but there's no need to do anything about this. This is ready to rock and roll. I still like it at the moment, building up for its order above liquidity. I still think it has the legs, so there's no need to get rid of that one. We took a win in the NZD JPY. We took a loss in the USD versus the Japanese yen. Cable at the moment looking incredibly risky. We actually triggered this one just this morning. It was about 8:45, and we came straight the way up immediately after the order was struck to test out the last defense, the last line of defense in this long-term. I say long-term. This is long-term for us. Long-term short that we're looking at, this sell and hold position between the two major liquidity points here. So it's not over yet, but it's not looking great. So, there's nothing to be done about it. It's live, it's in. So we're just going to sit tight and see which way that goes. Euro USD, surprisingly, unsurprisingly, is continuing to trade higher. This is, as I said yesterday, I believe as a result of the NFP fallout. This is the jobs numbers fallout from the US, and I believed, and I did say so in my market report this week, that we would see the continuation of the dollar decline and therefore the euro rise. And the dollar at the moment is actually 0.25% down today. So far, it does look like the euro USD is indeed going for the breakout of big liquidity there, and probably is up and away. Due to this, I would like to remove our short order from the euro dollar. If it was going to break down, it would have done it already in my eyes. That does not mean that we cannot reassess and reposition ourselves for a short if the opportunity comes into play over the course of the next 48 hours. But at this stage, the euro USD is dead in the water, so we can say goodbye to that one. Next up, we did have the euro yen and the NZD CAD. These were like sort of watch list pairs. They're still going to be. NZD CAD has moved away from the breaker structure point. Euro yen, it did indeed actually bounce back. We didn't get the breaker structure underneath 169.50 area, so there's nothing that can be done about those at the moment. The other one is the Aussie CAD. So Aussie CAD is actually doing really well at the moment. We are about, I don't know, maybe 0.25% of the way to our TP at the moment in the AC. It's, as I said, it's doing really well. I've mapped out a little bit of a roadmap for us here, and I will gladly take a picture of this one and fire it into the chat for you guys. So you can use that as a point of reference. There you go. So that's a bit of a roadmap as to where my prime points of liquidity are between major 1, major 2, or so I say, yeah, the minor points of liquidity between major 1 and major 2. So obviously we're still very confident, position built in here. This is where the money is, takeoff, on trajectory. These are the areas where we could see break, close, retest, or potential rebounds from the market. Maybe we come up to 89.54, we get a retraction back down at 89.35. Nothing to be worried about. Just the natural course of the way commercial positioning works in its given direction. So we should see the nice natural and organic continuation up to that 90.38 area up at the highs. So that's the AC. As for gold, unfortunately, we did take a loss in this one yesterday. Gold at the moment not really doing too much of anything. It's just kind of snail's pace along sideways. Did get the little bump up there. Gradually trickle down back to the previous lows again. There's nothing I want to be doing about this one today anyway. Up to UK Brent. I'm not going to remove the short order from this one at the moment, but we do have to shove the damn thing along a bit. We came down to the breaker structure element and we rejected it. Market's come all the way back up. It rose to 69.47 per barrel, and it's just kind of stationary at that moment in time. At the moment, we do obviously have still the continuation opportunity above, but I still think this one could go a little bit further before that buyback takes place. So I'm not going to be doing a single thing about UK Brent at this stage. And that is that. Now, you guys obviously in the live event won't actually see the order book. It will be in the it will be in the recorded session after the fact. But just a note that we so far have 1, 2, 3, 4 positions that were losses. We have 1 that was cancelled, and we had 3 winners. We currently have running the cable position and the AC position. Cable is flaky. We have the USD Swiss, which has been removed, so we can label that as an orange for cancellation. We have the Euro USD position. Sorry, no. Sorry. We didn't do that, did we? USD Swiss was ongoing, and the Euro USD was the one that was cancelled. So let me just make a note of that. That was cancelled. And then we have UK Brent, which is being left as well. And that's currently where we are. So quite a lot going on here. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 positions so far into Wednesday. Obviously, we're not going to be looking at any positions today as we are digging our heels into the Access Point and Entries workshop. But it's still pretty good, and I think we're going to continue with that. I would say modest wind, a modest wind in our sails heading into the latter half of the week. So, team, let's get stuck into the workshop then. So, the way I'm structuring this workshop is not going to be a good old-fashioned PowerPoint presentation or anything like that. We're actually just going to use the live market environment, and we're going to work our way through. I'm going to give you a couple of examples as to where I would deem the BCR be a requirement over and above the break of structure, and the reasons why. I'm going to outline that in very, very nice, easy to articulate, or so he hopes, way that you guys are all going to understand. And then what I'm going to do is I'm going to work through some pairs with you. I'm going to show you a blind chart with no analysis on it whatsoever, and I'm going to mark out, highlight an area that I would like to trade from, and you guys are going to give me a consensus on what you would like to do in terms of the break of structure, or a B, C, or an R and the R for the entry. Now, if I'm correct, I can do this. Which entry would be preferred? And then we've got or ABOS. And I can do that. Well, hey, look at that. See, that is awesome. So I can do that in real time, just sort of off the cuff. And this is going to be much better because I know there's a couple of you in the live event at the moment which are just absolute animals when it comes to following my process of things. You've been following me a long bloody time, and what you'll do is you'll instantaneously answer the question because you know, and that's great because it shows that you've been listening over the years, but it also answers the question for the others that maybe don't know the answer to the question. So this way it's completely anonymous, and then we can go through and I can ask who answered what at the end, and then we can discuss it. So that's the way that we're going to go forwards and do this. Everybody okay with that one? I don't see why you wouldn't be, and it's tough cookies really if you're not, because that is the way we're going to do it. Good. To be fair, out of everyone, it was you that would have a problem with it, mate, right? Nah, I'm not. I don't mean that. more than just you. There's another know-it-all in the room as well. You know who you are. What am I going to do quickly? I am very quickly going to do this because I feel that is important. Yeah, awesome. All right, let's get going then. So, blind chart number 1. Let's go. Okay, cool. All right, so the difference between a break, close, and a retest and a break of structure. Now, first of all, if you were to Google break of structure, the break of structure only occurs after an order block is formed in the market and then the price takes off. Now that is a bunch of bollocks, okay? And this is actually stemmed from social trends. This is more of a topic of social science. Now I'm not going to dig into it too much, but just be aware that there were some clowns in social media that started a fad that everyone became very obsessed with, and they made a bunch of stuff up, claimed they claimed that it came from professional backgrounds, and then years down the line, obviously, is completely been debunked. But the fad is still continued. The trend still continues. A break of structure does not necessarily come from an order block. It can come from any structural point from commercial positioning in the market. Now, as it happens, order blocks are generally formed prior to a break of structure taking place. This is a common occurrence. Not even that rare. It's a common occurrence, but it is not the only thing that takes place prior to a break of structure. Now, I'm going to highlight a couple of areas in this Aussie yen chart. Okay, we've got area right there, one here, and one here. Okay, now, what are the similarities between these 3 points in this chart? Let me just zoom that in so you guys have got a really nice clear view. So what are the similarities? Even though they don't look identical, And what are the similarities between these 3 points in the chart? Let me do that. Order block, consolidation. Yeah, that's it, right? So the market, when it's reached these areas, has essentially stalled. We've come down to these areas of consolidation, and generally, even this one, let's just zoom in on this one here for a moment, okay? Even this one, even though it's got these crazy big wiki moves at 4:45 in the morning, which will be from fundamentals, undoubtedly, there's still been a significant area of consolidation. We've got downs and ups and downs and ups and downs and ups. So essentially what we can do here is we can draw a high above and a low below. And then we can kind of iron out where the market's come down and dropped into and has remained stationary. And interestingly enough, I don't want to go off track here too much, but if we go back in time just a touch, we can see that the same thing has happened here, but in a reduced format, so like a smaller form. So we had a couple of bars in there, which were up and down bars, followed by these big explosive bars after the fact. So in here we have twice the time spent in consolidation, followed by twice the move, again via these big explosive bars. Okay, and let's just go down and study this one. So the market comes up to this area in here. We have the high, we have the low. Okay, the market breaks free from the low. This is where, and I'm just going to work through this really, really clear so everybody gets an absolute 100% image of what I'm talking about here. So this area in the market, okay, what is this called? So when the market is like this and it's going on for a while, and then it does this area, okay, and it breaks free, often performed via a break, close, and a retest as well, but we'll come on to that in the future. What is that part of the price action where it breaks free down below here? Or, well, can do it above as well, but we'll just start with the low. That's right. That is the break of structure, and in this instance, it is what do I call it? Like the market science. The actual term is the negative imbalance of price in this particular context. Now, if I invert the charts and we look at this upside down, but let's imagine that this is a bullish move and we get this area of the market, what's that called? Where the market comes down into consolidation and then breaks up and above. The positive, yeah. Positive imbalance of price, absolutely, yeah. Or our shortened term, the break of structure, the BOS. Now, let's just go back. Right, so we've now been able to ascertain this area in here. So an order block, an area of consolidation, is ultimately where commercial banks and funds are filling the market with orders. Okay, so that's what's going on in this area. I can copy and paste that in this area. So any space between these two is where the big guys up above are filling the market with their orders. And then the market gets ready to then plummet to the downside. Or can be the upside as well, dependent, of course. Now this is the similarities between all these three. Now the thing that the other side of that, the other similarity, is what happens after these areas are hit. And this can happen mid-move. It can happen at the end of the move. And we're gonna dig in deep to, which one's priority and which one's not out of the two. But in these instances, the similarity between all three of these, again, another similarity, is what? So if we look at all these three moves and the price action around them, clue, what's the other thing that looks the same after we get moves like this? Okay, maybe I need to rephrase the question. Yes. Yep, no, you're absolutely right. Scotty D has said that there is strong volume in the price after the break of structure takes place. So after the price equilibrium, after the range, there is always a significant amount of price action volume in the market after that consolidation takes place. So the market stabilizes, comes in here, chills out, rests for a moment, and then boom, big explosive bars. Little break, big explosive bars. And then in a very, very short space of time, we've been able to travel from let's say 96 up to 96.70. This is a 70 pip move in the AJ. That's a pretty big move, and that's from 5 a.m. in the morning until 8:30 in the morning. So we're not talking about a great deal of time here either. This is a very, very decent move, and we like stuff like that because as day traders, we want to be in and out as quickly as possible with the best type of risk reward. And then over here, same thing again. The market breaks up, we chill out for a little while. You know, this is, I used to use loads of different analogies, by the way, for those of you who are not long-term followers of me, of like an airplane. Let's imagine the plane lands at the airport after coming from a big journey. So we're flying. We land at the airport, we refuel at the station, and we get ready to hit our next destination. And the plane takes off again. In this case, we're, you know, the plane's spiraling, the plane's diving, but we don't want to use analogies like that, do we? And so that's where we are with that. And then if we move over to the third, okay, and look at this example, we have markets come up, we come down into this area of consolidation. We haven't actually looked at this too closely. Okay, so we have this area of consolidation, ups and down candles, lots of markets filling into the order, followed by, and now what I'm going to do here is I'm going to delete that, I'm going to make a smaller one, and I'm going to put it there. This is the positive imbalance of price, which has now been confirmed. This is the break of structure, and it's come with huge, big, explosive bars. Little rest, another big, explosive move. And again, we look at that very, very similar pattern. We look at the breakout, and we come right up here, and in the space of a couple of hours, we've moved almost 0.3% in this asset, 30 pips, in the space of an hour and 45 minutes. So a really, really nice move yet again. So that's really what happens prior to a break of structure taking place, which is why we are continuously trying to pinpoint those break of structure points. But break of structures are an aggressive form of entry. They are the entry that gets you in as quickly as possible, which means that you are taking on inherent levels of risk because of the fact that you're getting in very early in these moves, and the moves aren't always confirmed. Now, obviously, there's no such thing as a guarantee in the markets. We all know that. But you can add additional factors or additional confluences to increase that probability. So it's like, imagine, like a video game, and you're playing as some character who's got to jump across a river or something. I'm using a video game point here so that we're not actually risking real life or death in this analogy. Imagine you got to jump across a river, and there's a rope swing, and there's a load of other things. There's a way to go across with the rope swing, which is going to possibly get you across. It might snap the branch, you might fall in the river, and that's it, end of the game. Or you can build a raft that have loads and loads of fallen dry, driftwood that's all collected by the next to the river. That's going to take you 2.5 hours to do, but there's a greater chance that you're going to make it to the other side of the river. Now that might sound convoluted, I have no idea, I did just come up with that off the top of my head, but that is the same kind of process as we use in the markets to try and filter the trade from being a very high probability trade, making a high probability trade or a very high probability trade. And there's times and places in the markets that we should be using this. Now, if I zoom out here for a moment, let's just remove everything that we've done so far. If I zoom out here and we stop looking at the intricacies in the middle of these moves, we can see that there is actually a big ceiling on the 15-minute time frame there and a big floor in the 15-minute time frame down here. Okay, and now we get a broader view. We've sort of increased the size of data that we're using here. We've got some more context around where the market is going. Now, if I'm zoomed right in here and I look at this piece of price action in here, I am going to come up with a number of points of liquidity that I would say have actual valid breaker structure points as a result of breaking free above or below. So big breaker structure, this is a big structural point. Okay, big structural point here. We get the breakout, we go straight down to the ground zero. We come to this point and we have another breaker structure point in here because we have the low, another low, the retest, another retest, another retest. And as you can see, apart from low 1 and 2 here, these two lows, the market actually stays in between these 2 points for ages and still gets a rebound before the big breaker structure happens at the end of it, which is a day later. So you will find these little intricate breaker structure points all over the market. The market's littered with them because of the way commercial players are reallocating money and constantly moving from A to B and B to C and C to D and so on and so forth. So breaker structure in the middle of here is absolutely fine. But when we think about the broader context and we come way back out of the market and we're looking at this kind of thing, if I wanted to take a trade outside of either of these 2 points in time, I would automatically instigate a break, close, and retest methodology to gain access to one of these trades, either the breakout above or the breakout below. Now, can anyone in the room, and I know you can anyone in the room tell me why? What makes a break, close, and a retest the main point of access to a position looking at, outside of one of these 2 points, and not the main point of access to a trade that's between these 2 points? And don't rush it. It's fine if you take time to type the answer. That's fine. And anyone give me an answer to that? Okay, so all of you guys are right, but I want more. What is a break, close, and retest? When the market, what is the market doing? What's it telling us? What's happening inside the BCR? Not just because a BCR is needed, but what is actually happening? What's inside that BCR? And what does it tell us if it's right, if it continues? Yeah, exactly. It's I really like the 2 words there, buyers and sellers. Because that's what it comes down to. That's what we're dealing with. We're dealing with millions of buyers and sellers, right? The positive and the negative imbalance, Matthew. You absolutely, it's the same thing, different term. So that I really like that. So ultimately, the market's been in this range for a long time. It's established, isn't it? Right? It's an established range. We entered the range here on the 10th of July. We're still in the range on the 31st of July. This is a seriously long time. So it's a very, very well established area where you can imagine millions upon trillions of dollars have been flowing. So a lot of inflow and outflow inside this area. Now, when we get to an area like this, we want to confirm that the sellers are really selling the market, not just the fake out, because the fake out can happen like this. It can come right the way down and then we can come right the way back again. Now, look at this. Okay, prime example of a fake out, and I will put money on the table. I know it's an impossible bet. Obviously, we can't confirm, but I would bet anything that there was a lot of retail money lost on the breakout of this level because they were not waiting for the break, close, and the retest. Now, you could say that this is early on in the range, and that's fair enough. Frankly, the AJ at the moment, looking at the daily chart, where the hell are we? If you didn't have access to any previous price action, you would have gone back in time, and you would have seen this level in here. Okay, so if you weren't following that upon the initial inflection point and that coming down there, then yeah, on your head be it. Anyway, back to the main point at hand. So we've been in this very, very established range. We've got the break, close, and the retest. This retest is there to tell us if the selling is legit. That's why it's there. Is it fake? Is it real? Fake, real. It's only a real breakout when the market comes back to retest the level it's just broken from. And ultimately, what does the BCR, this point here, followed by the continuation down here, what does that give us? In a nutshell, what does it give us when we see that? Confirmation? Yes, it does. What's the other what's the other C word I'm looking for? This is not a trick question. Very basic word. Confidence. Yes. Confluence. Yes. Confidence, confluence. It gives us the go ahead, doesn't it? The warm and fuzzies. That's what it gives us. When the market comes back to retest an area and it still wants to go lower, you know that the big boys that are controlling the markets behind the scenes are wanting to go short. So we have the big breakout of structure. We wait for the retest to come back. You have your breaker structure point here. When that's broken, you can almost guarantee that that market is going for a pretty decent run before it starts to turn again and does whatever it does in the future. And from the point in which it retested that level and went down, we dropped a pretty significant distance before it decided to turn. So we're looking at a 0.73% move for 70 pips over the course of 8 hours, which is not bad at all. It is actually staggering now, and that's fine because our move's already done. But that's what we wait for a retest for, and that is why we wait for a retest in this particular context. So anything that happens in between these 2 points in time is breaker structure territory. Why? So let's say, for example, the market has, I'll tell you what, let's just do that, right? Right, let's pretend we're here. I know we already know where the market's going, but this is going to provide a bit of a better view. So the market's come from this area down here, okay? We're going to label this point A. Amazing handwriting there. This is point B, okay? Market's gone from A to B, from one mega point of liquidity. This is a major point of liquidity and another major point of liquidity. So the probability is what? Once point B is reached, what is the probability of the market? And I know we all know the answer because we've already seen it, but it doesn't matter. This is the rule. This is the context of the market. So it doesn't matter. So what is the market most likely to do once we reach point B? Go down. Yes. To drop. Of course it is. Why? Why is that the probability? Equilibrium theory. Yes, absolutely. But yes, thank you. Yes, it has done it in the past. If you didn't know the answer to that question, all you need to do is look left. That's all you need to do. Market's given you the answer. It's right there. What did the market do the last time we did this? Imagine if this is, again, point A and point B. Boom. Once it reached point B, what did it do? It went down to in this case, point A again, but point C. It went back down to the lows again. Right? So following that train of thought, the natural course of action when the market reaches a major point of liquidity like this is that the first thing we think is rejection. It's the first thing we think. Now, let me change the context here for a moment, okay? Let me change this whole context. Let's forget, okay? Forget what happened to the left. This is a bullish trend. And we've just completed this. Okay, and that's live price action. And let's say, for example, let's go to our daily time frame for a moment. I'm going to create a hypothetical situation for us. Let's say that this area in here Let's drag that across. Okay, back down to the 15-minute chart. Right, let's start again then. So what I've done here is I've changed the context. I want everyone to forget everything they knew from the left-hand side. This is the new this is the new context. Okay, so we've just had the market come from point A. We know that point B is now up here. Okay, this is the big daily area of liquidity up at the highs. And we've had this happen in the middle of our price action. So in this context, what is the most likely probability for the market now in terms of directional bias? Where do we believe the market is going to head? To go long, to go up. Yes, trend continuation, right? Yeah, definitely. Trend continuation, yeah. So then to fine tune this even more, we've now been able to ascertain where a BCR requirement is necessary. Usually we're looking for the break, close, and the retest outside of major points of liquidity. But what is now the best execution point or the best access point for this opportunity in front of us? How would we navigate this? Is a BCR necessary of this? Okay, cool. Right, so we've worked out that it's a pretty established level because we've been ranging in it for quite some time on a 15. So some of you are saying that a BCR is still a requirement. Now, this actually is a good segue into a talking point that it's important to cover right now. Just to note, a break, close, and a retest should not be considered in terms of a versus break of structure, if that makes sense. I know it's a bit of a convoluted way to explain it, but it should not be BCR versus break of structure. You have the opportunity to wait for a BCR, for a break, close, and a retest every single time, if that is your approach to the market. So you can add that in as an additional criteria, an additional requirement to every single trade that you take. So if you come to me and you see a trade and you know that I'm going for a break of structure on the trade, but you want to go for a BCR and you post the trade with a BCR, I'm never going to correct you. I'm never, ever, ever, ever going to correct you because that is your prerogative. That's absolutely fine. So you can have full control over that entry process. In this particular instance, I am actually on the side of the BCR than the break of structure. So what I would be doing is waiting for the BCR. When the BCR happens, I'd have a pending order in for the break of structure above there. So I'd have that as the break of structure at 97.23, and then I would ride the rally back up to 98.40, and that's how I would approach that Aussie yen instrument. So yeah, not bad at all. Yeah, exactly. The price has completed a BCR, yeah. But yeah, it doesn't matter anyway in this instance. To be honest with you, the BCR is a relative requirement of this. For me, it is quite an established area. We've had quite a lot of highs in there. Let's say, for example, just whilst we're here, let me come out of this for a moment. There we go. Right. Let's say, for example, we are... Where are we? Yeah, okay. Let's say, for example, we are trading here. And I'm looking to see for a continuation. Okay, scrap the fact that it's a 15-minute time frame. Doesn't matter. The price is all the same. Okay, we're trend continuation. We know that we've just come from there. What would the entry that you would prefer to have of that level there? What would you ideally have in this context? Wait for a retest liquidity then a break of structure. Okay, yeah, fair enough. See, I wouldn't. Obviously, yeah, it's a bit difficult, isn't it, really, without custom charts that we can kind of create on the fly. If you had main point of liquidity there, and you're on a trajectory up here, and this is in the middle, so you're going from A to B, and you have this point in the middle of that A point there and the B point up here, then I guess then the question would be, what would it be from there? I mean, what I was aiming for is a break of structure. We've already had the breakout. So yeah, exactly. So you wouldn't get into that on a... Yeah. Okay, that was probably me. I'll retract that one. That's fine. Yeah, so that is that. So at this stage, and don't worry, it's not coming to an end yet because we haven't done the exercises that we're about to come on to. Does everybody have a good understanding, or at least some of an understanding, of what a BCR versus a break of structure is? I think we do. Yeah. Okay, awesome. So what we're going to do now is we're going to work through some blind charts, and I'm going to ask you guys the question. And remember, there isn't really, because you can use a BCR in every single environment, there's not necessarily, when I say probably not, that is about more to do with fine-tuning your trading process rather than you got the question wrong. So take it, this is more about fine-tuning and developing yourself to get as good as you can with being able to understand the context of the markets and the complexities of the markets in a manner that's going to give you confidence taking breaker structure versus BCR access points. So what we're going to do, I'm going to close my eyes, blind. Okay, NZD-JPY, let's go. Right, so to be honest, team, as it stands right now, I'm probably, yeah, that's fine. Yeah, that's fine. Okay, so let's get to it then. Yeah, it is. Yeah, they are. I know it was the worst random pick I could have done, to be honest with you. But don't worry, it's only the first. So what is entry? Yeah, that's fine. If you're still answering, if you're away, say away. I just realised if you're not at your keyboard, we're going to be waiting for a while. Okay, we got 4 coming in. All right, let's have a look then. So major A, we have a 50. We have a 50-50. What is the preferred entry for major A? Half of you said BCR, the other half says a BOS. Interesting. Okay, so before we even dig in to that, who was it that said a BCR rather than a BOS for major A? Or who said a break of structure, actually, on the contrary? You guys both went for a break of structure on the major A. See, I position the words on the underside of the short and above the high because I anticipated you would have read that as a breakout of the big one or a breakout of the big one down below. Maybe I didn't make myself clear enough. That is my mistake. Funny how you guys thought exactly the same. That's fine though. No. That's fine. That's my bad. Okay, so I should say, okay, major A breakout. I will do that next time, and I will do major B breakout as well. Yeah, just to make things absolutely clear. Yeah, no worries. Okay, cool. That's fine. So first of all, you all got that right. That's absolutely fine. Right, let's have a look at the major B, which is probably... Hang on a minute, what? So you've all chosen a BCR for major B. So you all got that one right. So it was just the long. It caught you off, did it? So we didn't get any breaker structures for major B, which is fine. That's good. We know where we're at. You'd warm the see. This is why we do a warm up. This is why we do a warm up run. All good. Okay, guys, no worries. Right, let's look at minor A then, and we got 4 break of structure votes on that one, which is absolutely golden. So that's great. That's what we're going to do. The process works. I'm going to be a little bit more clear in my articulation. So really, really good. You're absolutely right, guys. So let's move out of here. Let's go to the Euro NZD. And this time things are going to be a little bit more complex. I'm going to make things a little bit more tricky. I'm also going to use the daily time frame. So, daily time frame, let me do some analysis and I'll get back to you. So, this is going to be good as well because you guys are probably going to be affected a little bit by hindsight trading because you can see the future, but that just makes things even more complex for you, which is good because you have to be very critical of yourself and think about what you would realistically be looking for in that point of time. I don't need to make that so wide. Okay, so we have got a ton of things to go here on this one. So we've got major A breakout this time. Okay, that's a lot of poles. So, wait, do we not have a major B? Major A. Oh yeah, whoopsies. That was my bad. Thank you, Scotty D. Yeah, you're absolutely right. Major C is going there. There we go. Yeah, okay. Right. So you guys can get answering these as I'm posting them. Okay, there we go. So we've got a ton out there now. So all work your way through those, and then we'll start working our way through the responses. Okay, 1 vote remaining on preferred access point to minor D. Okay, cool. Right, let's go then, guys. Let's start from the top. So the first one is, what is the preferred access point to major A? So major A being the one at the very top. Show results, the BCR. And you are absolutely correct. The BCR is the required criteria for a breakout of the major high because it's such an extreme level that it's been tested multiple times in the Euro NZD that it requires us to pay the necessary respect to the market, wait for those commercial players to bring that price back down, tell us that they are definitely going to be traveling long, and so that we can jump in thereafter. So good work, that's really good. Next one, what preferred access point to major B? Major B being the one to the sort of middle ground one here. So let's go check it out. What is the preferred access point? Show results. And that again is a break, close, and a retest. And this is again the absolutely what I would say to be the best course of action as a result of there being a very established level there that's been tested many, many times before. So very, very good as well. I like that. So next up, we've got what is the preferred access point to major C? So let's have a look at this. And a BCR is 100% voted for. And you know what? You're all wrong. Because I threw a trick question in there, which was my major C. It was my trick question. And the reason I threw that in there is to see if you would think about where the major C breakout label is. It's on the inside of the point down here. We're not looking for a breakout on this direction. We're looking for a breakout in this direction. And because we're on the inside of 2 mega points of established liquidity, we're actually only looking for a break of structure. But that's probably just me being an asshole. What do you mean? It's a break of structure, isn't it? We're on the inside of liquidity here. We're looking for that continuation between A and B. So it's a break of structure. Yeah, I know. I know. It was a trick question. That's all right. You weren't the only one, mate. No, that's all good though. That's all good. So really, what we'd be doing is the market's trading between these 2 mega points of liquidity. So naturally, we would be looking for the break of structure away from this point. We've reached the major liquidity, and so the probability even though it looks like the market's been going down forever, the probability is that the market is going to turn and we're going to take a rise out of this one. So it's a break of structure above there for the rally back up to the major point B of liquidity. Right, next question. What preferred access point to minor A? Minor A being this point up here. So let's have a look. Okay, so we've got some mixed answers for this one. We've got 50% on BCR and 50% on break of structure. So this is the minor A breakout. It's really annoying that these words aren't moving with the thing. It's because they're anchored. I shouldn't have had them anchored. I can delete that one. That's fine. I can delete this one and I can delete that one. This is going to be there. This one is going to be there. And this one is going to be there. Okay. Right, so minor A breakout. We're looking at 50% BCR, 50% break of structure. And this is a really good one as well, guys, because, well, it's tricky, isn't it? It is really tricky. I mean, it's an established level. But, equally, it is right up at the point of the liquidity up here. So it's a really interesting one. Who voted for what on this one? Who voted BCR? Who voted break of structure? As I have it, I see two BCRs, two break of structures. Excuse me. Unless someone voted for a BCR by accident. BCR just because of where prices come from on the top. And do you know what? You are absolutely spot on the money there, Scotty D. So if we're thinking about my brain and the way I think about things, again, I just want to reiterate that there is no such thing as a wrong answer here. But if you're following what I would do and the way I would trade down to a T, I would be waiting for a break, close and a retest of this level because of where prices come from. And that is the God's honest truth. It really is. Price has started its journey from point A. Okay? That's where price has started its journey from. Since reaching point A, we have not seen point B yet. The market's come down here and then it's actually turned back. So I would fear taking a break of structure trade here for it being a fake out and continuing its journey down to point B, because this is ultimately where the money is. That's where there's a lot of cash left in the market. Okay, there'll be a lot of liquidity between 186 and 184. So we really want to be thinking about that. So in this instance, the BCR has it. Again, I want to reiterate, there is no such thing as a right or wrong answer here, as you can use whichever access point you deem necessary. But if you want to be trading like I do exactly down to a T, the BCR I would be indeed waiting for on minor A. No, you're absolutely right, mate. Yeah, you're absolutely right. Okay, that's good. Good talking point though on that one. Right, let's dig it down then to B, C, and D here. Right, let me just zoom in. Let's make a little bit of a point out of these areas so we're all crystal clear on what we're looking at. And I'll just fine tune these. So that one in there, we've got the highs in that level as well, and then we've of course got the main breakout area. Right, back to it then. So we've got B, C, and D. So first of all, what is the preferred access point to minor B? So we have one break, close, and retest, and we have 3 break of structures. Okay, now let me just zoom out here, provide some context to you guys. That's where we are zoomed out. Okay, now who was it that said the BCR? Okay, interesting. And why did you say a BCR caught him on that one? What made you feel that that was necessary? Because of the time frame. Okay. Well, yes, it is daily, but remember that if we went down to a 15-minute or a 4-hour time frame, you would have had your retest. So regardless, look, to be fair, we could probably put this down to simple error in communication. The time frame for me in this session, in this workshop today, is irrelevant. not really too focused around the time frame. It's more of the major versus minor points of liquidity and their context to our access points to our trades. So the time frame shouldn't really come into it too much. For me, this is break of structure territory. Why is it break of structure territory? Because the market has already come down for this area in here, and now we've got the big break of structure, right? So this is definitely 100% for me. This is break of structure territory because we have come from the major point A. Again, just want to reiterate, big liquidity in here. The next point of call, we're probably aiming for major point B. So from one to the other. That doesn't necessarily mean that the rest of them are going to be breaker structures though. But minor B is the breaker structure point for sure. Right, let's go on to the next one. What is the preferred access point to minor C? 4 breaker structures. 4 breaker structures, and that's minor C. So this is this one. I think I've cocked this up actually. Let me do this again. Hang on a minute. I'm going to leave minor C breakout. I think I cocked this up because I was zoomed out of the chart. And I don't want anyone to have been confused on the basis of my points that I'm utilizing here. So let me just put that there. Okay. Just to be absolutely crystal clear with what I mean. And then what I'm going to do is, we're talking about minor point C here. There. Right. Second round, guys. This is for minor C. And remember, you have to think about what price would have looked like at that point in time. We're talking about the breakout above. Yeah, breakout above, just to confirm. What the hell? What was that? Oh, which entry we referred? There was no winner. What the hell does that mean? Hang on a minute. Sorry. This is a bit... I don't know what that's about. I have no idea what that's about. I'm going to delete that. Pretend that didn't happen. Right, let's have a look. So we've got 3 votes. Let's get more votes in, guys. This is for the breakout above minor C. Well, hey, we got a full rack on this one. Okay, let's go. Show results. So we have 1 BCR and we have 4 breaks of structure. 1 BCR and 4 breaks of structure. Okay. Interesting. Okay. Who was who? Who was the BCR? Okay, Scotty D voted a BCR. Do you know what, Scotty D? I am a BCR on that as well. I am indeed. The reason being, and there's one main point here. There's one main point of this little area in here. Now, unfortunately, because this is on the 6th of March, I don't think I'll be able to have the 15-minute candles where I can go back and look explicitly at the 15-minute time frame in this one. But if we zoom right in here, if I'm in real time, okay, so let's imagine the market's trading in here, and this is where I'm at, and, you know, this is where we've come from, right? So we've got this breakout, we formed this high. In my mind, with the trajectory of where we're going and the lack of a retest from this point back into A, would need to see a break close and a retest of this area to give me the confidence that the market was indeed going to continue traveling to 198.80, because I know myself, if I'm looking for a move that big, which is an extraordinary move, it's a really, really big move. I'm not talking about the daily time frame, I'm just talking about any bit of price action here, but that is a really big move. If I double click and stretch the chart out, look at the size of that bloody move. It's huge, and yet to be seen is a BCR. So if we've got a break out of this area here and we've started to form a high, then this now becomes the new market high, which is what naturally we would be waiting for the sort of retest continuation. But we haven't had a retest continuation yet. That's not happened. So I would need to wait for I would just need to do it. I would need to have the confidence in the market that that was going to continue trading higher because of the lack of a BCR down here. Does that make sense to everyone? I know it makes sense to one of you, but does it make sense to everyone else? And if it doesn't, please say. Same thought process as me. No retest of major level below, so I would be inclined to think price still needs to come back. Yeah, exactly. Yeah, the point is clear. Yeah. The retest not necessary. The retest not necessary all the way to major A. Just to the previous minor level is okay. Oh, I see what you're saying. Yeah, so if I'm waiting for a break closing. Yeah, well, if the market breaks out above here and we start getting the retest, right? So if we get to here and we, yeah, okay. So look, it actually does do it. I completely forgot it even did it, to be honest. If the market comes up to this level and look, we come back, it's a bit of a weak retest, isn't it? It's not really the kind of retest that I like. I usually like to see an opposite colored candle. So then we come back down and we come back down. Okay, right. If the market comes to this level and then continues trading higher and we get the breaker structure, which would be the breaker structure above 191.50, great. That is great. That we don't need to see the retest coming all the way back down to liquidity. Maybe this is as much of the retest as we get. The market comes back down to this level, it retests that level. Fantastic. Okay, so now what we're doing here is we're waiting for the break of structure. The structural point for this is here. That's the structural point, right? It's that high. So we need to see a break above that high, and then we can get the move from A to B. Well, in this case, it wouldn't be from A to B exactly, but it would be the rest of the move. That's what we're going for. If the market doesn't have to come back down to 186 if it breaks this. If it doesn't break that level, then it needs to hit this level. If it doesn't do either of those things and it stays trading in the middle, then we don't trade it. Right? But one of these things has to happen in order for us to take a trade. Either 186 at major A or the breaker structure at 191 for minor B, I think it was. Yes, for minor B. And it's interesting, guys, okay, going back here for a moment, because you all voted, apart from Coratim, you primarily voted a break of structure for minor B. Right? So you guys have already ticked this box. You've already done that. This one, however, is a little bit more tricky because in this one, the context change. We have the break of structure, which is up at the highs here, but down at this point, if we're in real time, we have a high that's been formed, and it's the only high that's been formed since we've broken free from the big liquidity down in major A, and we've lacked the break close and retest to give us the confidence down there of that big area of liquidity. So we need to still see a BCR somewhere. So there's the BCR. We bottom out here for a little bit. We rest, start to build up for the next leg. It rallies a little bit. Well, I say a little bit. It kind of remains stationary in here. This is where the order's filling into the market, isn't it? So we have all the money filling into the market down here. We then get a little bit of a breakout, back up again to test this high, but still not broken the structure. And then, boom. And look at the size of the candles as a direct result of the structural breakout of minor B. Right? We waited for the break of structure. Boom. And what we've done is we've got the break, close, and retest that we needed for that confirmation to take place. So we've got we've got what we needed. The market never actually ended up coming back down to A, did it? It missed A. But it came back down to a point so that we could fill up at the station before taking off again. And that is what we needed. We needed that confidence that the market was coming down. It was retesting an area. In this particular instance, it was a bit above liquidity, but we still saw what area is this? What happened in the market here? Let me highlight that as green. What happened in the market in the green box? Refueling. Yes, it was. It was the refueling time, wasn't it? The order block. So we've broken above. We've come back down. We're now refueling at the station. The money is filing into the market. getting ready for its explosive breakout. And that explosive breakout naturally takes us straight to point B. And this is how we read commercial liquidity, guys. This is how we read the charts, not from just a mere candlestick to candlestick method or patterns or, you know, even the bullshit that all this smart money bollocks is. And I know I use the taglines as well because it gets views, but it's all about commercial. It's all about commercial interest. It's all about liquidity, and this is how the markets ebb and flow. So, and this is exactly why we use the access points that we do between the breaker structures and the BCRs. In this instance, that's a really difficult one because of where it is. Usually the BCR would happen here. It didn't in this instance, which is why I wanted to add this one in and take the time to work through it because it is a bit more of a tricky one. Let's have a look. Let's finish it. Let's finish it off. Let's make a clean break of it. So the minor D breakout. So all the way back up. So what is the preferred access point to minor D? Show results. And so we got 4 votes for a break of structure on the minor D. Yeah. And it is. It is just a break of structure at that point in time. Yeah, you're absolutely right. Because in that real time, that real context, you've already indicated that a break close and a retest is necessary of major, whatever the bloody hell it was, major B or whatever it was. So we've already got that part of the puzzle, and then at the high we have a breakout, the breaker structure. So yeah, you're absolutely right. Okay then, ladies and gents. We are now at 2:51 p.m. GMT, which means I've been on chatting away for almost an hour and a half. Are there any more questions? Alright guys, well, I guess in that instance, I will wrap things up there then. Yeah, wishing you guys a great day. Good luck out there. No problem at all, Coratum. It's my pleasure, and the rest of you as well. I really enjoy doing it. It's been a while since I've done a proper dedicated workshop, and yeah, I enjoy it. I enjoy explaining things like that. It's good. So yeah, have a good one, guys. Have a great afternoon. Take care of yourselves out there. I look forward to catching up with you again tomorrow. We'll get stuck straight back into the trades, and yeah, have a great rest of the day. So I'll see you then. Thanks, guys. Bye bye.